Sam, and welcome everyone. Today we're going to be talking about one of my favorite topics, which is individual retirement accounts, IRAs. And we'll also talk a little bit about reporting for the Coverdale Education Savings Account and also the Health Savings Accounts. The CESA and the HSA are the other products that we'll be looking at the IRS reporting. Now, as we start with IRAs this afternoon, you always have to remember when you're talking about IRAs and IRA files and then checking that against the reporting that there's really only two things that happen with IRAs. The money comes in and the money goes out, and that'll be also true for our Coverdale Education Savings Accounts and our Health Savings Accounts. So when we're tracking the money coming in and the money coming out, there's documentation that we do for the money coming in, and then there's IRS reporting that we do and reporting to our customer. So this in and debit credit kind of mentality that we have as bankers and credit union folk, it does help us when it comes to the reporting because we're thinking, okay, in came the money, how did it get reported? So what I thought we'd do first is kind of go over what's in the IRA reporting. We'll look at the 1099-R and look at the 5498 and talk about how the money comes in and how the money goes out and what those codes are and what's supposed to be on those boxes. And then I want to look at some of those common errors. I always love, I get sometimes some very detailed emails from people around the country about, okay, this is what the customer did. They did it in 05, and now this is what's happened and how it's gotten awry. And so sometimes it's kind of like a puzzle when you make a mistake and trying to figure out where the mistake was made and what you reported to the IRS and then how to correct all of that error that happens along the way. So just as a way to open the conversation, just remember now that the IRS has on their website, irs.gov, has both instructions, general and specific instructions for IRS reporting. So some of the things that we'll be talking about today will come out of the general instructions, and of course some of the things will come out of the more specific instructions for each particular form. But when we're talking about the money coming in, the 5498, this particular form reports IRA contributions. So the customer comes in and makes a deposit into their IRA of $5,000 to $6,000, and we're going to report that contribution in. The customer takes money out, of course, we'll be reporting that, and that would go on a different form. So just kind of keeping your eyes here, you might want to keep this page 5 on the side just so we can kind of take a look at each box as we go through, but just some general things to look at. You see that it says the issuer's name, street address, the trustee's name, street address. Of course, that's you. And most of you are actually custodians, but you're the issuer of this form. And then it has the participant's name. Now, when we see the 1099-R, it's actually going to have the recipient's name. It's a little bit different. And so the participant's name there, what we're talking about there is, of course, the person that owns the IRA. On the recipient's name, we're talking about the person that receives the money, and that could be a beneficiary of the IRA, and it also can be the owner of the IRA, so it could be either. And so sometimes you see those little different wordings. And we see the account number. It says if you have an account number for your IRA plans, then it's nice, of course, to put that down there. And then we'll start looking at these boxes and kind of go through them and go over what is necessary for us to complete and what goes in each boxes. You'll see quite a few interesting boxes now that we haven't seen in the past, postponed contributions and repayments and some of those kinds of things. So I want to kind of walk through these. Now, just remember, we don't use all of these boxes. We certainly don't use box number 6. The 5498 is also used for other kinds of products like IRA annuities and things like of that nature. So kind of taking your page 5 and keeping it in front of you as we go through and look at it, we see box 1 will show the traditional IRA contributions for 2012, made in 2012, and through April 15th of 2013. These contributions may be deductible on the customer's Form 1040 or 1040A, but that's really nothing to do with us, but that's the amount of money that goes in. If it was not a traditional contribution, but it was a rollover contribution, including direct rollovers, I always like when I look on your TRAN codes. Like if I go into a bank or a credit union, I look at a list of their TRAN codes, there's like 6 strand codes for rollovers. And I'm like, I always think that's funny because there's only one box for rollovers, but you'll have like 6 different strand codes to put it in that box too. So you're going to have different kinds of things, different kinds of rollovers, direct rollovers and indirect rollovers from company retirement plans, and then you'll also have rollovers from IRA to IRA in that box too. And box 3, you've got the Roth conversion. So when they convert from a traditional to a Roth IRA, when they take all the money from the past and bring it to the future, and they make a conversion from a traditional to a Roth, and remember, a conversion is a one-way street, that it goes out of the traditional IRA as a distribution and into the Roth IRA as a conversion, and that shows there in box 3. And box 4, you show amounts recharacterized. There's another kind of funny word, but let's just suppose your customer came in and said, I'd like to buy an IRA, and your new account person said, great, what kind? And they said, well, I got the traditional and I got the Roth. And the customer really doesn't know too much about it, so they put the $6,000 or the $5,000 in the wrong IRA. A recharacterization allows them to undo that. It's the best button in the world. It's like the undo buttons on the computers. It goes both ways. So you can undo from a traditional to a Roth, or you can undo from a Roth to traditional. But where box 3, a conversion, is old money all the way back, can be converted, box 4 is only for current year contributions. So only that error that was made this year, and it can be fixed up to October the 15th. And that's what a recharacterization is. It's a fix. We take it out of the traditional file, we put it in the Roth file. We take it out of the Roth file, and we put it in the traditional file. And then box 5 is the fair market value. And so it is the value as of 12/31 of year end, and of course that's where we show the balance on this account. And box 7 is the kind of IRA that's reported on this form 5498. So you could have a traditional IRA, a SEP, a simple, a Roth, and the appropriate box for the contribution will be checked. And then we see in box 8 SEPs. And I promise you, about every August I get a lot of calls about SEPs. And those are simplified employee pension plans for primarily small businesses, small corps, small LLCs tend to use the SEP contribution. And what we see there a lot of times is, since these are coming in after May 31st, the 5498 is typically reported on May 31st, or if that falls on a weekend, on the following Monday. So here we are in August. Well, you already reported your 2011, and now we're coming up to August 15th, and then October 15th, we could still be getting 2011 contributions into a SEP, but yet they are going to get reported on the 2012 5498. And that makes people really crazy and kind of confused, and the business owners, a lot of times our new account people want to put them as a prior year contribution. But in SEPs, there really are no prior year contribution. They are reported in the year that they are made, typically, especially if they come in after that May time frame. So you've just got to be careful about that and explaining that and showing those instructions to your customers sometimes, and then it kind of calms them down. And in box 9, all the simple contributions that are made, and in box 10 are the Roth IRA contributions. And then in box 11 is where we start to see some things that are happening now for required minimum distributions. So if that little box is checked in box 11, then the customer will know that they have to take a required minimum distribution that year. And if they don't take that required minimum distribution, that they can be subject to a 50% excise tax on the amount that's not distributed. So any way we can let our customers know they've got a required minimum distribution, we're trying to do it, because, again, we don't want them subject to that 50% penalty because the distribution does not get made. And then you'll see, and these are